Hello, everybody, and welcome to today's webinar called Modern Slavery Compliance, What We've Learned and What's to Come. My name is Chris Demopoulos. I'm the Marketing Manager at SafeTrack, and for 20 years, SafeTrack has been a leader in online compliance training, specializing in, obviously, compliance, but also in career skills, and now talking about modern slavery with our guest panelists. With today's webinar, we do have Q&A and chat function enabled, so please interact with those functions on your screen and ask our panelists any questions that you have along the way. We'll try and answer these at the end of the presentation, and if not, if we run out of time, we'll look to answer those offline and send that to everyone that's on today. So onto our presenters. Today, we are lucky to have our Chief Executive Officer at SafeTrack, Deborah Coram. Deborah has been with SafeTrack since 2011, and since that time, she has helped the business grow immensely in that space of compliance. Deborah comes to the business with more than 15 years' experience in legal technology and the software industry, including senior positions in the UK, USA, and Australia. She's featured in many major publications speaking on compliance, and in fact this morning was on a top 100 podcast named Fear and Greed, so by all means jump on that one. That one's a great listen. So thank you, Deborah, for joining us. And we also have Geraldine Johns-Putra, who's a legal governance and modern slavery expert. Geraldine has 20 years of experience in practicing law in Australia, UK, Hong Kong, and China, and has become an expert in the enterprise governance and purpose, business and human rights and modern slavery areas. She's worked with large global firms and recently with Minter Ellison. And now Geraldine sits on one of the peak governing bodies of Australia's largest university, Monash University. And now she's working in her own practice. So thank you, Geraldine, for joining us. I'll hand over now to Deborah Coram, who will take you through what we're looking to cover off today. Over to you, Deb.
Thanks so much, Chris. So today, thanks everybody for joining us. We really appreciate you being here. It's obviously an area of huge interest to many organisations. We've had massive interest and sign-ups to this webinar, so it's great that everybody is becoming so engaged in this really important topic. Today we are going to cover just a little bit of what is really a very complex area, and unfortunately the time frame we have doesn't give us a lot of time to go into huge depth, so we'll cover as much as we can in the time frame allowed. We're going to cover off the modern slavery framework around the world and how that differs and where it's the same to that we've recently implemented within Australia. We're going to have a look at the initial reporting period that we've just been within the Australian legislation, and look at some of the things we've learned as a result of that. We're going to talk about some of the challenges that organisations have faced during that reporting period and in becoming compliant with the legislation. And we're going to talk about how we're going to engage our staff and our supply chain, and talk about some of the solutions that SafeTrack's creating to help ease the burden of the reporting and the supply chain due diligence process. So moving on to what we're going to talk about is really, I just want to set the scene of what we're talking about, which is modern slavery. We are living in a world where modern slavery is endemic in many of our supply chains, and we are seeing companies named and shamed where their supply chains see them utilising slave labour. The most recent example we've seen has been the use of the Uyghur people being transferred and assigned to factories in a large range of supply chains within the electronics, textiles and automobile industries. And of those 27 factories, we've seen multiple major brands implicated in the use of this labour. Brands from Abercrombie, Adidas, Amazon, Burberry, BMW, Gap, H&M, the list goes on, of very large brands that have been implicated in the use of this labour force. And it's events like these which, and indeed our new legislation, which helps the awareness of modern slavery grow. It's very clear that this is becoming a topic, either with or without legislation, that organisations have to step up and take responsibility to prevent the occurrence of this type of labour. And while primary responsibility does lie with the governments and businesses, we need to ensure that all of our staff and all of our people are aware of what they can do to be looking out for modern slavery impacts within our supply chain. So we're going to go on to the next slide, where I'm just going to go through a couple of, I guess, fairly alarming statistics about modern slavery. We're talking around 40 million people estimated to be trapped in modern slavery worldwide. And that works out as about 1 in 200 people around the world is actually working as a slave. 1 in 4 of them are children. Almost 3/4 of them, or 71%, are women and girls. Over 10,000 have been identified as potential victims in the UK alone in 2019. And modern slavery really takes many, many forms, from human trafficking, the use of violence, threats, coercion, the recruitment and harbouring of people to exploit them, into forced labour, criminality, marriage, even extreme cases of organ removal. We're talking forced labour where work and services of people are forced to do things against their will and under threat of punishment. Death bondage and bonded labour, which is probably the world's most widespread form of slavery. We're talking where people are trapped in poverty. They borrow money and are forced to work to pay off that debt, and they lose control over both their employment conditions and the debt. We've seen a lot of these out in fishing companies throughout Asia. Descent-based slavery, which is the most traditional form of slavery, where people are treated as property and their slave status is passed down the maternal line. Slavery of children, where a child is exploited for someone else's gain. And that can include trafficking, utilising children as soldiers, child marriage, child domestic slavery, and forced and early marriages, where somebody is married against their leave and cannot leave. Married against their will and cannot leave. So we're talking about a wide range of problems here, and it's really become incumbent on multiple countries to say, well, what can we do to stop this? And we are beginning to see some modern slavery emerge through the UK, through California, and Australia taking a leading role in starting to legislate against the utilisation of modern slavery in supply chains. I'm going to pass over to Geraldine, who is going to take us through some of those frameworks around the world. Geraldine.
Thanks, Deb. Thanks for the excellent summary of what modern slavery is, how it impacts us and how it impacts the victims. Now, the thing about modern slavery legislation, you're quite right. The front runner in this was California, followed by the UK and Australia. The thing about modern slavery legislation is it's about covering a gap. Multinational companies in the era of globalization are operating across borders. They're actually sourcing labor, they're sourcing raw materials in some countries, and then they're selling the end products in other countries. Where they're sourcing the materials and labor are often countries with poorer records in terms of rule of law, corruption, safety standards, and so on. And that's tied into why the costs are lower in those countries or jurisdictions. And then those companies who are operating across borders, selling the products to consumers in more developed countries where they gain higher prices, and where often the companies are regulated. Now, consumers in those countries are now beginning to have higher expectations of those companies as they operate across borders. So no longer is there a gap in the governance no longer, thanks to consumer expectations and now these laws that we're going to talk about, no longer is there that gray zone. So companies are learning that they can't take advantage of this sort of regulatory arbitrage, and they're being made to step up. And in response, I must say that companies who have been subject to this legislation have really stepped up. I mean, we've seen, particularly in Australia, we will come on to this, some very gratifying examples of companies taking this responsibility very seriously. So California, first off the rank, it was 2012. That was a law that applied to retailers and manufacturers only who do business in California with annual worldwide gross receipts of over $100 million. The thing about the Californian legislation, the first one, was it was quite a simple approach. It did have model guidelines, and it asked these retailers and manufacturers to report on 5 areas of the supply chain: due diligence, verification, audit, certification, accountability, and training. And what that drove was a bit of a tick the box exercise. But what it did do was it created a cascading effect, and the UK was the next one to respond and require, like California, reporting of human rights abuses in supply chains. The UK Act that came in 2015, and that applied to companies with a turnover, companies that supply goods or services in the UK. So that's the criterion: supplying goods or services in the UK with a revenue threshold over £36 million.
So quite a lot lower than the Californian one.
Yeah, lower. And really, this UK legislation has become a model. Our Australian legislation was fairly well conformed to the UK Act, except our legislation has an aspect to it that actually makes it tougher. So it's taken the UK and built on it again. So you can see the way the evolution has occurred from California to the UK to Australia. The UK requires a statement to be made by companies, commercial organizations supplying goods and services in the UK, meet the revenue threshold, to report on the human rights risks of modern slavery in their supply chains. And it has a list of criteria that companies can report on. It's not mandatory criteria. The statement can include those things. And it refers to several things, including policies and training. But when you look at those, what the statement may contain, which, as I said again, is not mandatory. It's voluntary in that the statement may contain those things, not must contain those things. It looks a lot like ours. So if you look at the criteria that we ended up with, which is what must be in our modern slavery statements, it looks like the criteria that may be in UK modern slavery statements. So that's the key difference between the UK and the US. The UK has criteria that may be in the statements. Our criteria in our modern slavery statement must be in our statements. So that actually creates a stricter approach when you come to look at modern slavery statements in Australia. You must see those 7 things, the 7 criteria referred to as mandatory criteria in Australian modern slavery statements.
And if you don't do that, is there a penalty for that?
Now, this is an interesting thing about all of these 3 acts, right? They do not have clear penalties, right? So in Australia, there's an injunction. Sorry, in California, there's an injunction that can be brought by the Attorney General. In the UK, it's also an injunction that may be brought by the particular secretary. And in Australia, it's an explanation that may be demanded by the minister. And if there's not a satisfactory explanation forthcoming from the entity that should be reporting and should have these criteria in its statement, then the minister can publicly name the entity involved.
Right.
So all laws are disclosure laws. So that's another clear thing to be explained here. They're about reporting. They're about reporting about certain things. They're not actually about taking action to stop modern slavery in X country or Y supply chain. All right.
Yep.
So the other thing is no penalties.
Yeah, and in relation to the Australian model, Geraldine, we've got the federal framework, and we have New South Wales framework, and we have Tasmania. Now, the federal framework requires that company have a revenue model of $100 million in revenue, in turnover, in order to need to be compliant with that legislation. Can you take us through that, and then talking about the New South Wales Act, where that's actually at, and the new draft Tasmanian bill? And are we expected to see a slew of state-based replica legislation? Are we going to have to comply with both? Do we send 2 reports? How does that nexus legislation work?
Sure. This was something that really occupied people's attention for a lot of 2019, 2018 into 2019, because the Modern Slavery Act, the Commonwealth Modern Slavery Act, introduces this reporting requirement for entities with consolidated revenue of over 100 million. They've got to report on these 7 things, including the risks of modern slavery practices in their operations and supply chains, and in that of entities that they own or control. And then they've got to describe the actions taken to assess and address those risks. That's the nub of our modern slavery reporting requirement. So we, with great fanfare and with a bipartisan approach, Commonwealth Parliament introduced this passed the law in 2018. Now, at the same time, or in fact, before the Commonwealth Act was passed, New South Wales had passed the Modern Slavery Act. Modern Slavery Act of New South Wales had a lower threshold, $50 million threshold if you were doing business in New South Wales. Or if you're an entity in New South Wales and you had at least 1 employee in New South Wales. And there was lots of questions about how the 2 would interact. If you were over the $50 million threshold and had to report in New South Wales, that's fine. But if you were over both, then did you have to report in both Commonwealth and New South Wales? So New South Wales finally clarified with draft regulations before the Act came into force. They clarified with regulations that if you were required to report under the Commonwealth Act, you would be exempt from reporting under the New South Wales Act. So that at least clarified that if you had a reporting requirement that looked like you were covered by both acts, then you would only need to report under the Commonwealth Act. However, there were other issues with the New South Wales Act, and including whether there was a constitutional issue with the fact that it was covering the same ground as the Commonwealth Act. And what happened was that the New South Wales Parliament referred it off to a committee to have a second look at. And this committee did report and did recommend that the New South Wales Act should come in, but it still hasn't yet. Where we are is that New South Wales Parliament has said it is going to work with the Commonwealth Parliament on trying to harmonise the 2 thresholds, which really means, because they prefer the $50 million threshold, means they want to work with the Commonwealth government to bring the Commonwealth threshold down to 50 million, but it's just unclear how that's going to work. And right. So the New South Wales Act continues to be on the books, but not enforced.
And I note the Tasmanian bill has brought that threshold down to 30 million. So do we think this is indicative of the fact they're expecting the federal to go to 50 and they're wanting the states to go around to around?
I don't think there's a huge expectation that the Commonwealth government is going to change the threshold, not before there's a 3-year review period for the Commonwealth Act, not before that period is up. Because the Commonwealth government is very focused, its modern slavery unit is very focused on doing the work of looking at the statements, doing the work of helping companies and entities understand their supply chains. And they haven't made any noises about fundamentally changing parts of the Act. So I think what the Tasmanian bill is about is bringing the threshold down so that there are companies that will have to report under the Tasmanian bill, Tasmanian Act, should it ever be passed, because they are between the 30 mil and 100 mil threshold. Now, they've also got an exemption in that bill, If you have to report under the Commonwealth Act, you don't have to report under the Tassie one. The Tasmanian bill is it's gone no further. It's been introduced by a member into the lower house, but it hasn't, through 2020, it hasn't moved.
Look, it's
as I'm not expecting to see much more.
Yeah, right. It's interesting the implications that this threshold has had on all suppliers, though, because anybody who's a supplier within Australia will have been asked by a major corporation that is required to report to provide a report on their own supply chain. So we're seeing smaller businesses getting, caught up in this legislation, even though they themselves don't have the requirement to report. Have you seen a lot of that? And what's the sort of thought process there, that these large companies are requiring small businesses to look through their supply chain, but indeed under the legislation, they're not required to. What's the impact there, Geraldine?
Yeah, so it is an impact that is affecting small and medium-sized businesses that wouldn't be caught by the Act, but basically having to implement the same sorts of policies, contract clauses in their own supply contracts, possibly even training their staff and so on, at least to satisfy their possible or potential customers who are asking them these questions. There has been an incredible spread of modern slavery awareness through the economy in Australia after the Modern Slavery Act came into force. And I actually think it is a positive thing to cascade down the awareness of modern slavery and actions to be taken without imposing the reporting requirement on smaller companies. Because what we're seeing is companies responding by looking for certifications or looking for ways in which they can satisfy those requirements, taking part in industry collaborations, even if they don't have a reporting requirement. And it is a way of creating the right kind of ecosystem when it comes to modern slavery awareness.
Yeah. So moving on,
it does create a compliance burden though for smaller companies.
It sure does, yeah. And so we'll talk to that a little more as we go forward. Moving on to the submission of the modern slavery statements. And I think we move to the next slide and we'll have a look at a snapshot from the Border Force website where the register of modern slavery statements is stored, and there we can understand that based on the 2018-19 report, there's around 2,347 entities that are Australian public and foreign-owned corporate entities with a total income of $100 million or more, meaning that that's really how many statements we should be expecting to receive on here. You can see at the moment, at the date this screenshot was taken, there was 1,368 submissions. So at this point, we were looking at around 41% completion of who were expecting to file versus who has actually filed. Now, you could say that the reporting period has closed, but for that reporting period does change depending on the company and the reporting year for the business. So I think we've got up until August this year for some of those companies to finish their filing process. And I think as of today...
It'll be June.
June. Okay, sorry, June.
Yeah.
And as of today, we looked at the screenshot again after we took this screenshot, and I think that's gone up to 50%. So they're coming in thick and fast at this point in time. At this point, we would like to put up a poll. Chris, would you be able to do that? So what we'd like to understand of our people who are here, how easy or difficult did you find the whole process of collecting the data, training staff, and completing your modern slavery statements? If you weren't involved at all, you can simply say, NA, you weren't involved. And what was the main method did you use to engage your suppliers? So this issue of the supply chain due diligence has been one of great discussion as to how it was done. Some it was done by letters, some it was done by an email asking for a response, some has been done by Excel spreadsheets, some were done by using surveys. So if we can all take a moment to just answer that survey, and then I'll get Chris to put up the results so we can sort of see with what we're dealing with. We've got around 250 participants, so that gives us a fair idea. We've got a fair range of people here, and a lot of the people are from large businesses that are required to be compliant under this legislation. So hopefully some of those people have been involved in that process. And Chris, do you have some results on that?
Yeah, almost there. Just leaving it a few more seconds just to get a last number of attendees if they're.
It's worth mentioning that the government has been very proactive in looking at the statements that have come through, reviewing them. They have actually put out, and we'll come on to that, what they see as the good trends and the areas for improvement. The statements that I've seen that are excellent. So I'll actually, I know that this was a question that somebody had put through earlier. What are the good statements that we have seen? What are ones to look at as model statements? I'm just going to call out a couple of entities that did a fantastic job. One was Woolworths. Being in the supermarket business, they have a massive job in terms of understanding their supply chain and consolidating it so as to make sure that they know their suppliers. And they have a statement that's worth looking at just to see how they put the data across on their supply chain. You know, they've got a global supply chain, they have so many products, and they've actually put it out in a really clear graphic. There's another, and they've also actually got an excellent documentation of the partnerships that they're involved in, how they've leveraged their partnerships to help them with due diligence and help them with their reporting. The other statement that I thought was worth naming was the Qantas statement. Now, Qantas has a history of having been reporting longer than many Australian companies because they were reporting under the UK Act as well. And through that time, they've had quite a journey, and they've, in terms of putting out modern slavery statements, and they've shown a consistency building on their modern slavery statements from one year to the next. Calling out what they've done last year and what they've improved this year and what they plan to do next year. They have a good page on their due diligence process. So if anyone wants to actually have an understanding of how you carry out supply chain due diligence, I would suggest having a look at that statement.
Yeah,
now, I have no affiliations with either company in my current role. I just thought that they were worth.
It was also, it's really gratifying to see some of these companies. You mentioned the supermarkets were probably, and Woolworths, the amount of slavery that they found and that they've reported upon, which is brilliant, because it's not that, I think some people thought, oh, we don't want to mention that we've got it in our supply chain. It was almost expected that you would find it in your supply chain. It wasn't about it not being there. It was about uncovering it, naming it, and doing something about it. And I've read some really wonderful rectifications that have occurred as a result of the uncovering of that, which is the repayment to victims that have been caught up in these supply chains, that they haven't severed contracts with these businesses. They have required them to make payment restitutions to the staff involved if they wanted to continue that contract. So I love to hear this sort of result is happening in response to this modern slavery legislation. That, to me, shows it's really having a significant impact on the lives of people that are engaged in slavery, which is a terrific outcome.
I agree. And we mentioned that there were no penalties under this act. There are, in fact, penalties under the New South Wales Act that hasn't come into force yet. So there's been this question about whether penalties are needed. But what we're actually seeing is a response from the business community that would very happily show that you don't need it when companies take their responsibilities seriously.
Yeah.
And
Geraldine, we've had a question from one of the panelists.
Yeah.
Sorry.
I was going to say
a question from one of the. You go.
I was going to say that what you're talking about is a victim-centered approach to remediation, where you're actually compensating workers who haven't been paid properly or who've had substandard labor conditions imposed on them. That is what this legislation is trying to achieve. It's trying to make sure that people don't just cut off their contract with their supplier, and they work with their suppliers and with NGOs to make sure that the victims are looked after.
Because of course, if they cut that contract, those people lose their jobs, right? So they're in a worse position than they were before.
Or the business is done with some other customer who's willing to accept that in some other part of the world that doesn't have a Modern Slavery Act, say. So when I draft model modern slavery clauses for clients, the termination clause often does have worked into it the ability to work with the supply rather than an immediate termination. Same with incident management frameworks. It's about understanding what's going on, doing the investigation and the verification if you are faced with a modern slavery incident, rather than the knee-jerk legal black letter terminate the contract approach.
Yeah. So Geraldine, you said that Woolworths did a great job on their statement. Were there any other companies, if people were looking for model companies to look at and model statements to look at, who would you recommend them going and having a look at?
So I did name Woolworths. The other company I named was Qantas.
Yep.
Fortescue Metals was another early mover in terms of producing quite a good modern slavery statement.
Yeah.
So
okay.
Those would be the three
so just bring up that poll. I don't know what I did with it, but I've lost my poll. I can't see the results in front of me. But would see that the majority of people who were involved showed that it was a difficult process and a time-consuming process, which is to be expected. I think the only companies that would find this very easy would be ones that had a very, very simple business model, that everything was based in Australia and they weren't procuring goods off a third party. Even then, most companies, I'd take my own business as an example, we're an Australian business, all my staff are in Australia, but we're still using technology and systems that are coming from companies all over the world. So even simple businesses now are necessarily using goods and products that are from supply chains from all over the world. So I'm not sure that there is any simple answer to creating a modern slavery statement. And would you agree with that? It's, you know, if it was simple, you probably didn't go into as much depth as you probably should have.
I couldn't agree more, because the reporting requires you to report on the risks of modern slavery practices in your operations and supply chains, and what actions you've taken to assess and address those risks, including due diligence and remediation. That's what the legislation says you have to report on. So if you're going to have anything to report, you're going to have to do some due diligence. So even though this is a disclosure law or reporting law, it's not a law that requires people to do due diligence per se, which some laws do, for example, in European countries. Our law is clear, is just a reporting law, but it does mean that you have to do some due diligence so that you're going to be able to report. And the question of modern slavery due diligence is really what has occupied reporting entities in this space for the last year and a half, maybe more than that.
Yep. And so onto the other part of the survey. Sorry, I can't see it because I've closed it. Geraldine, can you address what it said?
Yeah. So what main method did you use to engage your suppliers? The majority, so 55 of the respondents, 36% said an email Excel questionnaire asking them to complete. Just 32% have said they weren't involved, so they're not sure. And lower down, it's an online survey or letter and others.
Yep.
So that's 36% that we know of doing it by email or Excel questionnaire. That is really what I saw most of as well.
Yep.
Sending people an email and asking them to fill out
Very
a
cumbersome process to gather those responses, though. There's no doubt about that. And for individual companies having to do them too. Moving on, I'm aware of the time. I want to ask you about your experience, Geraldine, in compiling these reports. Now that the first period has been done, we've had feedback from the government. You've obviously been involved in a lot of these yourself. Could you take us through some of the feedback? And I'll just be aware of the time here, so we need to be fairly concise about this. and
Yeah,
what the areas for improvement are in relation to what we found.
Yeah, the government's feedback is that what they saw that was really good, and that's just laid out here. That I think we had a slide on the feedback, which was what they saw was really good with these things. There's when you're aligning a statement with the mandatory criteria, you're addressing COVID impacts. You're assessing the effectiveness of your actions. So you've got plans that you're setting out of how you're evaluating, tracking, showing what you're doing to collaborate, like partnerships, including case studies and practical examples, and setting out a plan for future action, because continuous improvement is a big part of what the guidance on modern slavery reporting has been from the government. And these are the areas for improvement. And I was actually not surprised by several of these when I saw these. The first one is not getting the necessary approval from the board or the signature from the director. That's just a technical thing that really shouldn't happen. Submitting a statement used in an overseas jurisdiction. I saw that happen a lot, where people were putting forward a UK statement, and for what reasons that I've explained earlier, because the UK Act doesn't have mandatory criteria of all the 7 criteria that we have. They're often less, they're often skinnier, contain less detail than what's expected in the Australian market, not identifying the reporting entity or entities properly, not talking about how you've consulted with the entities that you own or control, or other reporting entities where you're producing a joint statement, and not adequately describing the risks of modern slavery, the context, or the extent, or the nature. Now, that last one is quite hard, because you're actually requiring reporting entities to say, these are the risks that we've identified, and be quite specific about what the impact of those risks are, instead of just saying we've identified risks in hardware, in the hardware suppliers to our business, or IT hardware suppliers to our business. That's one sentence, and leaving it at that. You've actually got to really say what that means for you. So those are the areas, and I saw the same thing. So I think coming into the next year, companies, what I see, from the last couple of years, is companies that are subsidiaries of multinationals operating in Australia. The team here really needs to be making sure that they have a voice, and making sure that the policies that are enacted overseas are properly used in Australia, that the supply chains that are being reported on are actually supply chains that impact the Australian entity that's reporting, not just relying on what's coming over from the overseas companies in the group, or from central compliance, because our Australian legislation is quite specific in what it requires.
Yeah, right. So moving on from, I guess, what has been, where are you seeing the wins from last year, and what areas we have for improvement in the next reporting period?
Yeah. So what I saw from last year, I worked with companies across the spectrum in terms of approaches. And I'll talk about what you were describing as the company with a very localized supply chain, doesn't have to do much. That might be the approach going in. But as I worked with companies like that, it was very clear that you've got to do, like I said, some due diligence, even if it's desktop, and thinking about where you might need to then go out and do external due diligence on your suppliers. I worked with such a company, and we ended up identifying that the IT providers were a risk. And so external due diligence in the form of questionnaires was put out to that particular segment of their supply chain. And that was a very focused approach. I'm going to talk about examples of companies that really have got something to build on from the first year, going on into the future years of reporting. And those are companies that from the start treated it like an important collaboration for the company, an important project, brought in the right members from multidisciplinary teams, from risk, from legal, from communications, from procurement, and from human resources, set up a cycle of accountability and action, and then and then made sure that they influenced other parts of the business adequately. So for example, if you're dealing with onboarding of suppliers, because that's part of your due diligence, you need to make sure that you understand who your suppliers are coming in, onboarding as well as ongoing assessment. Then you need to have the right person being able to influence procurement. And so the companies that set up those teams with the right influence managed to not only get their due diligence done, but managed to integrate the actual check or the actual action into their systems. And so created a loop, right, that's ongoing. So now they'll have every 6 months, the procurement team is going to do a check, or every year the procurement team is going to do a check. And that's important because that means that there's repeatability in the modern slavery compliance process. And so the hard work that you've done in the first year, with setting up the questionnaires and so on, you repeat into coming years. And then you can also then begin to focus your resources on what matters, which is then you can really start to focus on the high risk areas of your supply chain. You can start to focus on where you might have weaker supply in your supply chain. You can divert resources if there is an incident, if the media begins to pick up on something that affects your supply chain. So you can focus resources on watching media for modern slavery incidents. I mean, that's the ideal. And if you're not there yet, then it's a matter of making sure that you get there in the coming years.
Yeah.
Well, this year, really.
Yeah. You touched on something in relation to the directors and signing earlier on, and we've just throughout it had a clarification question on who can sign those statements. I'm just wondering if you'd be able to address that for us. So for the MSR requirements, only a board director can sign off a modern slavery report. Can
so it's
the
got to
CEO of a global bank's Australian operations sign on behalf of the global board is the question.
Well, it depends on who the reporting entity is. So the simple answer is it's got to be approved by the principal governing body, which is normally a board of the reporting entity. And then it's got to be signed by a responsible member, which is a member of that principal governing body, so by a director. So that's just for a statement that's been put out by one entity. But if you've got a joint statement, then there are different approaches. It can be approved by all the boards, or it can be approved by the entity that's putting out the statement, or it can be approved by one of the other entities. But you then got to explain why it's being approved by one of the other entities that are reporting.
Okay,
but generally speaking, it's a board and director. So you'll see, for example, Qantas is signed by Alan Joyce because he sits on the board.
Right. So moving on to, I guess, one of the key issues, and I think we've had a few comments about it throughout the seminar, about how difficult the compliance with the due diligence has actually been. And I'm going to change our mode a little bit onto what SafeTrack's doing to ease this compliance burden. Many of the attendees to this session, I think probably about 85% are SafeTrack clients, and many of whom are utilising our training, which Geraldine, you helped us author, and keeping it compliant. So alongside legislative changes, as long as that's updated and as long as there's new Australian legislation or changes to it, that will always be updated. So you don't need to be checking the law, we'll do that for you. And we are really excited to launch our new survey tool. Now we have written these surveys, Geraldine, in conjunction with you. And we are launching new functionality within the SafeTrack platform, which will enable you to run your own self-assessment check on your own compliance with the legislation. So we have a range of questions and sections that you will answer about your own compliance with the legislation to check that you are doing everything that you need to be doing. And so that's something that you can do. And then we have drafted a supplier survey, which you can send out to all of your suppliers. So just like you enroll somebody into SafeTrack training, you enroll your suppliers into the SafeTrack survey, and you can survey their compliance with the modern slavery legislation through a range of default questions, Geraldine, that you've helped us author. There's a range of sections and risk ratings in relations to those results. You can send that survey out. You can have a completion time. The system will follow that up with the people so that you're not having to do the follow-up. You're not having to send out letters. You're not having to check that they've completed it. The system will follow them up automatically. You can report on your completions and non-completions. The system will aggregate the data. It will highlight the risk in the sections of either them across all of your suppliers or across individual suppliers. And so the burden of doing these surveys in an Excel format, which has been the majority way people have done that, will all be combined into an online format. So we are very, very excited to launch that tool. And it's the beginning of what a lot is to come with surveys with SafeTrack. We are looking to launch these in a whole lot of areas of core compliance. And we're increasingly see this modern slavery legislation pushing compliance across into your procurement lines. So we're increasingly seeing third parties are going to be impacting your organisation's ability to be compliant. It's not just modern slavery legislation, it's privacy, it's data security, cybersecurity. These other issues are all sort of becoming supply chain compliance issues. So we're going to be looking really closely at that in SafeTrack as we move forward. We are launching a complete modern slavery kit so that you can acquire the training and both of those surveys as part of that package. And you can follow up with your account rep who will be able to give you a demonstration and show you how that functionality works. We've got a bit of a demonstration running right now, which sort of takes you through the screenshot of how it looks. But we envisage this significantly helping organisations minimise the work of gathering all of those supplier due diligences and responses from all of those different suppliers. So we are very excited about that.
Yeah, I just wanted to say about that, Deb, that came out of work that I was doing with clients. And what we were finding was that just by doing this kind of exercise, you end up with risk ratings. You do use a human qualitative check on the risk ratings by looking through the data, but it actually simplified the process a lot, and it allowed focus on the higher risk suppliers that the process threw up. Now, like I said, it does mean that you use a human being or a committee of human beings to look through and sense check. But what we found using this sort of process was that it actually made sense. What the process was producing were actually high risk suppliers that you would expect to be high risk, and the low risk ones you would expect to be low risk. So it's a way of easing the burden. It does make it repeatable. And like I said, you use this as a mechanized or automated means. You follow it up with human application, but you're freeing up your resources so that you can actually use it. Where
I think that repeatability aspect is really important. You don't have to set up a new process or send out new letters or send out new surveys every year. You simply reset your resend button, make sure you've got all your suppliers loaded up that are accurate. And that's really all the work you need to do on an annual basis. Plus any change to the questions. The questions, we've set you up with a list of default questions that you recommend people be asking, but they of course can be customized. So for instance, if you are in a very specific area and you're, for instance, a supermarket and you're doing a lot in relation to fishery companies, there might be some specific questions about the practices of that particular industry that you want to focus upon. These, of course, can be customised as well. So these are sort of default questions that should be your starting point, not necessarily your final point. So, Chris, I think that we've probably got to the end of our time. There's a question that's come in that I'm just going to ask Geraldine the answer for how she responds to this. We've had a question saying that many of our clients are asking a cleaning company if we have unskilled migrant workers. However, without an official definition of unskilled migrant workers, as a cleaning company, we do have migrants working with us in a role which is considered unskilled. How do we propose to answer this without becoming a risk?
Well, so if you're being asked that by your customers, I'm assuming that this is not a reporting issue. It's actually an issue between you and the customer. So what you'd want to do is you'd want to provide the information to the best that you can. So you would have to create, if the customer isn't giving you a definition, you'd have to create a definition yourself of what's unskilled or skilled, and allocate that to your workforce and answer the question accordingly, and then tell the customer, this is how we've decided what unskilled is. Or you say to the customer that we consider, that our workforce is skilled because we give them the appropriate training. You take the same approach, which is about disclosure. So long as you're making it clear, whether that's in response by email back to the customer, that this is how you're answering the question, then it's that customer who may have the reporting requirement under the Act. They've got to be sure that they are reporting accurately under the Act using the data that you are providing them, right? So you don't have a reporting requirement per se, is how I'm taking the question, but you have to you should be answering the question that's asked of you honestly and truthfully, so that you're not misleading your customer. And you may have a contractual obligation to be providing accurate answers as well. So you'd want to be providing accurate answers, but you could set the limits on how you're answering by telling your customer that that's how you're answering it. So that's how I would approach that.
And as a final answer, Geraldine, any tips, what best practices are emerging in relation to investment fund managers with regards to equities, index funds, capital assets?
Yeah. So the financial sector is one that really grappled with this, and I had financial sector clients that had to be. They were asking themselves, how do we look at our investment portfolios? Because investments, if you are lending or financing, is part of the operations of the business. So there is guidance that's given that you don't need to drill right down, that you can actually answer on a category by category basis. So the practice that's emerging is to identify the investments by category. So is it infrastructure? Is it over the counter or exchange traded? Is it a private equity type ownership, equity ownership? Identify the categories of your investment, how much leverage you have over the sort of investment choices, and then rate the risk according to the category, and rate your ability to do something about it, i.e. your leverage according to the category. And not really drill deeper than that to say, this is the investment we've had and this is where we think that there's a risk, but to use these broad categorizations, because that's really, if you're dealing with a large investor, a large fund manager, you can't really detail all of the investments that you have.
Yeah. Yes. Really, I mean, there's a huge amount to explore and a huge amount to learn. And as we know, this is our first period. So we are all in a learning phase. We can certainly look at examples of companies who have taken leadership in these areas, and we can see the implications and the positive implications that we're having already and the impact on slavery that we all can contribute to by following this process. And I think it's one of those feel-good laws, actually, that if we do this, we can actually improve the lives of many, many people. So I feel really, really passionate about this legislation. I know you do too, Geraldine. Whilst it is a burdensome process for companies to go through, the impact that we have and the ability to affect other people's lives is monumental, which is actually quite exciting.
Yeah, when this comes up for review in a couple of years' time, it will be very interesting to see what the government says about what's occurred. They are extremely proactive. They've got an advisory group up that meets regularly, and they actually set out on their website what their advisory group is looking at. They are now focusing on the textile industry in Asia, and they are also focusing on how small and medium-sized enterprises, which is one of the earlier questions, can improve their compliance, which is mainly in the form of answering questionnaires.
Yep.
So I see our
hopefully
government.
we can help with that bit.
Absolutely. So I see that our government is going to actually, it's crystal ball gazing, but I think we'll continue with this approach. Penalties has become less of an issue, a hot potato, than it was. They might decide that they need an anti-slavery commissioner. The Tasmanian bill has one in the bill. The New South Wales Act provides for one and actually has appointed that person. They might go with that as an addition, but I think so far, if the trend continues, then they may not actually do a lot more tweaking on the main parts of the main operational parts of the Act, what's being reported on and how to enforce it.
Yeah. Well, thank you so much for your time today, Geraldine. It's been terrific to talk to you. Everybody who's attended today, thank you very much for your attendance. We appreciate your interest in the topic. To the extent we haven't answered questions, we will go through those. We'll send an email out about any questions we didn't address. And I hope that you've all enjoyed today's session. Thank you.
Thank you. Thanks, Deb.